High earner taxes are about to go up in the UK, and the UK Prime Minister is saying it's going to be painful, and those with the broadest shoulders should pay more. It only means one thing: high earners and wealthy individuals will see an increase in their tax bills. In this video, I will discuss the expected tax changes and what options you could consider. I'm a chartered accountant from London, and I help people deal with finances and tax. It is highly anticipated that Labour government will increase the capital gains tax. They could also remove the CGT exemption when someone dies, effectively increasing the death taxes and reducing the pension tax relief. I will go through these points one by one with a further explanation. Capital gains tax is payable when assets are sold for more than what you paid for it. For example, you purchased a property or some shares or crypto coins. Let's say you paid £100,000 for it, but when it comes to selling it, you've sold them for £200,000. The difference is subject to capital gains tax. The rate of capital gains tax is significantly less than income tax. In other words, you get to keep more of what you earn and not lose it in taxes. The rationale behind this tax treatment is that when you're employed, you're not taking on a risk, but when you are investing, you are exposed to the risk because the value of those assets can go up and down based on how the market performs. Therefore, the government or the tax system incentivizes you and rewards you for taking on that risk. Major tax experts are anticipating that there will be an increase in capital gains tax. So if you have unrealized gains and you've been thinking about selling them, you could consider selling them before the new tax changes to make use of the current rates. You probably know that a lot of people are trying to sell at the moment so that they can benefit from the current rates. The second point is about the interaction between CGT and IHT, and this is an interesting one. Because when you die with unrealized gains, your assets are only subject to IHT but not CGT. The assets are rebased in value as if they are acquired by the beneficiaries at the market rate, which is the transfer value. In my personal opinion, it would be unfair to remove this exemption. However, this is another area that the government could consider to help raise taxes. Alternatively, within the IHT tax system, they could also remove the business asset relief, which is another method used by tax professionals to reduce taxes for their clients. The third and final point in this video is about pensions. If you are lucky enough to be a high earner, you would be hard pressed to find a tax relief as good as the pension tax relief. You could very quickly build wealth by making a habit of contributing to your pension scheme. And you can get a comfortable retirement. It is fair that the government gives a generous tax relief because you're not a burden on the system when you get old and you're less able to earn the same amount of money as you do now. However, so it's all good in terms of what's happening now. However, it is costing the UK taxpayers a lot of money. It is expected that the pension tax relief will continue to stay, but it will become less attractive in comparison to the current system. I hope you found this video useful. Like and follow to stay connected, and I look forward to seeing you in the next video.